You already know that feeling, that sick drop in your stomach when you check your portfolio and everything is red. That moment where your brain starts screaming at you to do something, anything, just make it stop. And so you sell. Or maybe you panic buy because everyone online is talking about some stock like it's the greatest opportunity of your lifetime, and you don't want to be the only one left behind. Then it crashes. And there you are again, back at zero, wondering why this keeps happening to you over and over and over again. This is not a coincidence. This is not bad luck. This is emotional investing, and it is silently destroying your financial future in ways most people never even realize. Here is something that took the most successful investors in the world years to understand. The market does not care about your feelings. It does not care that you needed that money. It does not care that you worked 60 hours a week to save it. The market is a machine, and if you bring your emotions into it, that machine will eat you alive every single time. And before we go any deeper into this, I want to be real with you for a second. If you are someone who has been trying to figure out the investing game on your own, and you keep hitting the same wall, we have a program linked in the description below this video. I genuinely want you to think carefully about whether you actually want to keep doing what you have been doing, because if what you have been doing has not worked, there is a reason for that. The program is there for people who are actually serious about changing their results. Most people will scroll past it, and honestly, that is fine. That program is not for everyone. It is only for the ones who are truly ready to stop losing and start winning. If that is you, you will know. Now let us talk about what emotional investing actually does to you, because I promise you the damage goes much deeper than you think. Picture this. You have been watching a particular investment for months. You have done your homework, sort of. You have read a few articles, watched a few videos, told yourself you understand what is happening. The price starts climbing. You feel a rush, that electric buzz of possibility. You are watching numbers go up, and your brain is doing something very specific in that moment. It is releasing dopamine, the same chemical that fires when you win a bet, when you fall in love, when you eat your favorite meal. Your brain literally cannot tell the difference between smart investing and gambling when you are riding an emotional high like that. So you go in. You put in more than you planned, way more, because it feels right, because the momentum feels unstoppable, because some part of you actually believes this time is different. And for a little while, maybe it is. Maybe the number keeps climbing and you feel like a genius. You start telling yourself you figured it out. You start imagining what life looks like when this thing triples. You can almost see it. Then one morning you wake up and it has dropped 20% overnight. Just like that, your stomach hits the floor. You are refreshing the screen every 3 minutes. Your hands are shaking a little. You are not sleeping properly. You snap at people around you for no reason. This investment that was supposed to change your life has now become a source of genuine psychological pain. And here is the worst part. You are making your next financial decision from inside that pain, which means the next decision is going to be just as emotional as the first one, maybe more so. This is the cycle. And it is costing people not just money, but years of their lives. People who have been in the market for 5, 7, 10 years and have almost nothing to show for it because every time the emotional tide came in, they got swept away. Research consistently shows that the average retail investor dramatically underperforms the market over time, not because they picked bad investments necessarily, but because they bought at emotional highs and sold at emotional lows. The math on that is brutal. When you buy high out of excitement and sell low out of fear, you are locking in losses while letting gains evaporate. You are doing the exact opposite of what creates wealth, and you are doing it because of feelings, not facts. Think about the cost of that for a second in real terms. Say someone starts with $5,000 and earns a consistent 7% annually without emotional interference. In 20 years, that becomes nearly $20,000. Now take that same person and have them miss just the 10 best performing days in the market over those 20 years because they were out of the market at the wrong time due to panic. Their return drops to almost nothing. 10 days out of thousands, and the difference is life-changing. That is what emotional investing costs you, not just money. Time, the most valuable and irreplaceable resource you have. And here is what nobody talks about: the emotional toll this takes on your confidence. Every bad decision compounds in your mind. You start to believe that investing is not for someone like you, that it is too complicated, that people who make money from it must have some secret you do not have access to. You start to pull back, to play small, to let your money sit in savings accounts earning almost nothing, because at least that feels safe. And the years just keep passing. Let me paint you a different picture now, a completely different version of this story. Imagine someone who genuinely understands how their emotions affect their decisions, not in a vague feel-good way, in a precise, systematic way. They have learned exactly what happens in their brain when the market drops. They know the fear is coming. They have prepared for it. So when the red hits their screen, they do not panic. They look at their strategy. They look at the data. They make a decision based on a framework they trust, not on a feeling they cannot control. That person is not smarter than you. They did not have more starting capital. They did not have some insider advantage. They just learned how to separate their emotional responses from their financial decisions. And that one skill, that one fundamental shift, changes everything. When you stop investing emotionally and start investing structurally, something remarkable happens. You stop checking your portfolio every hour. The anxiety goes away. You sleep better. You stop making impulsive decisions. You stop following the crowd into bubbles and stampeding out of opportunities. You stop being the person the market feeds on. You become the person who lets the market work for you. That is not a fantasy. That is what disciplined, emotionally intelligent investing actually looks like for real people who made the decision to change. Here is something worth sitting with. The most dangerous investor is not the one who knows nothing. It is the one who knows just enough to feel confident, but not enough to be consistent. Because confidence without structure is just another emotion. And in the market, emotions are liabilities. Think about how much time you have already spent on this. The hours researching, the nights worrying, the money you put in with hope and watched disappear. The conversations you had with yourself in the car on the way home, trying to figure out what went wrong. What if all of that time and energy had been channeled into a system that actually worked? What would your financial picture look like today? Most people never ask that question honestly, because the answer is uncomfortable. But you are still watching this, which tells me something about you. It tells me you are not someone who is satisfied with staying stuck. You are someone who wants to actually understand this and get it right. Here is the reality of how wealth is actually built. Slowly, deliberately, emotionally detached, and with a strategy that does not require you to predict the future. The people who consistently win financially are not smarter. They are not more educated. They are not luckier. They have simply mastered the mental game. They have built a process around their decisions that removes the chaos of emotion from the equation. And the people who keep losing are often incredibly smart people, hardworking people, people who care deeply about their financial future. But caring deeply is not enough. Caring deeply without structure just means losing with more intensity. That is the brutal truth about emotional investing. It turns your greatest strength, your passion for a better life, into your biggest vulnerability. So here is where this leaves you. You have a choice in this moment. You can take what you have learned here and try to figure the rest out on your own. Maybe that works. Maybe you can piece together enough information from enough places to build the discipline and the system you need. Some people do. It usually takes years of trial and error and loss and frustration before the picture finally becomes clear. Or you can take a different path. The program we have linked in the description of this video exists for one reason: to help people who are done learning things the hard way. It is not for people who are dabbling. It is not for people who are vaguely curious. It is for people who are genuinely tired of watching time pass while their financial situation stays the same. The people who have tried to do this alone and have realized that trying to do this alone is exactly what has been holding them back. The transformation that comes from investing with clarity instead of chaos is not just financial. It touches everything. Your stress levels drop. Your confidence rises. Your relationship with money becomes something completely different. It becomes calm, strategic, empowering. Most people reading that description below will hesitate. They will tell themselves they will come back to it later, and later becomes never, and nothing changes. But if you are the kind of person who recognizes a real turning point when it is standing right in front of you, then do not let this be another moment you look back on wishing you had moved differently. The link is there. The decision is yours. The version of you that has actual control over your financial future is not that far away. But it does require you to take one step that is different from every step you have taken before.